revitalizing its growth momentum, with GDP growth reaching 5.5% in the first half of this year. And this is particularly noteworthy considering the uncertain global development characterized by financial turmoil, supply chain disruptions, high inflation, and ongoing geopolitical tensions. And Fu Linghui, the NBS spokesperson, emphasized the Chinese economy has demonstrated its resilience, especially in the face of weak global economic recovery. So what are the main takeaways from the headline figure, and what does it suggest about the overall health and stability of Chinese economy? Haibin, let's start with your take.
Yes, we have the second quarter GDP number came this week, 6.3%. This is below expectation, and it's verify the story of the deceleration in the sequential growth from Q1 to Q2. But if you look through the monthly data has been very choppy year to date. In February and March, we see actually stronger than expected data. Then in April and May, a big deceleration. June activity, from that perspective, is kind of misreading. There are some silver lines from the June activity, for example, industry production, manufacturing investment, and the infrastructure investment, which it came in stronger than expected. But there's also some weak spots. For example, real estate activity, consumption and service has been slowing down. But overall, I think that the silver line from June activities that show that economic activity is still on the weak side, but momentum seems to be stabilizing. Now, if you look in more detail on the second quarter GDP reports, January, I would say it point to several near-term headwinds that the policymakers need to take in account. First is the weak confidence among the private entrepreneurs, which leading to the weak private investment, particularly compared to the public investment. Second is the weak confidence among consumers. So we see actually consumption and service activity has been slowing down in the last few months. The third one is that the risk of double dip in the housing market has been increasing, and that's probably posed the biggest near-term pressure and also spill over to LGFV, local government financing vehicle funding stress. Fourth one, deflation risk is also imminent, particularly GDP deflator is turning negative, minus 1.4% in the second quarter. PPI has been in the deflation territory for 9 months in a row. Headline CPI is still zero. Core CPI is still positive, but still very low. So I think that the deflation risk is real right at this moment. And finally, youth unemployment continue to reach a new record high, 21.3%. So these are issues that we need to address in the coming quarters.
Indeed, there are some weak spots about the economy, but the Chinese economy is still growing faster than most other major economies in the world. So, Mr. Hong, what are your main takeaways from these latest data? And do you believe that the economy is on track to achieve the target of approximately 5% growth for the entire year?
Yeah, I think we still got half a year to go, right? So I think the second quarter is showing some improvements over the first quarter. Even though the market is focusing on the headline number of 6.3%, while its consensus is looking for 7% and a bit, but if you look at the sequential improvement, so it's really showing that growth has stabilized. We're slowly coming out of the trough, and also Haibin just now mentioned that IP figures is actually much better than expected. I think disposable income is holding steady. And also consumption, even though it's slower in June than May, but overall it is showing a steady picture as she goes as well. So I would say that there are challenges ahead, especially the property sector. I mean, obviously, property sales starting to decelerate faster going into the months of May and June. Right? So now we're not seeing positive growth in property sector. So when that happens, I think some of the developers may have problem, recycling the cash and redeploy the cash into new project development. So I think, property has been, a very large part of the Chinese economy and has been one of the main driver for economic growth. So, this problem has to be dealt with. But having said that, in 2014, we've seen this episode before, right? So the property sector was coming out of a very restrictive purchasing curbs in 2013. So going into 2014, the property sector actually spent 3 quarters of negative growth in 2014 until, in the final quarter, with policy helps, with easing monetary policy, then it actually come back to life. So I would say that this year the challenges is probably even greater than 2014. But I think with the picture, the inflation picture, which is seeing 0% CPI and also deflationary pressure on the upstream, I think it's probably time to act, to use policy to stimulate the property sector out of trouble.
Indeed, the government needs to navigate a very challenging economic environment. And Haibing, in light of the current economic situation, how confident are you that China can achieve its growth goal of 5%? And what policy adjustments might be needed to bolster the economy?
I think 5% is still achievable. Our forecast for this year is still 5%. But compared to some months ago, I would say that the uncertainty has been increasing. It's no longer take for guaranteed for 5.5%. So from that perspective, policy adjustment is probably desirable. Of course, we already see that the policy easing starting in June. Right? So we see actually on the fiscal side, on the monetary policy side, and also city-level housing policy relaxation and extension of the 16 measures for the 16 measures announced by the central government. So this has been useful to particularly to support the manufacturing infrastructure and IP activity, actually reflecting the June activity. But the near-term headwind, I totally agree with Paul that the housing market is posing the biggest near-term risk. We see actually major housing activity indicators still. For example, new home sales, new home starts still decline by around 30% in year-over-year term. So that posing a big near-term macro risk, and it's critical to stabilizing housing market in the second half. So from that perspective, I'll say the policy easing will continue, but we do not expect a bazooka-like policy stimulus. We're not in an urgent situation as we saw in 2020 or 2022. As I said, the full-year growth target is still on track to be achievable. So there's very little incentive to repeat flood-type policy stimulus. So we believe the policy easing will be modest, gradual, and also continue to be targeted. Actually, we're expecting that on the fiscal side, probably some additional policy support coming from policy bank. Monetary policy side, we expect PBOC will cut the RRR and cut the policy rate in the second half. And housing market, probably more policy easing on the housing market to stabilizing the housing activity in the second half.
So modest stimulus seems there's still room for the government to maneuver. Mr. Hong Hao, what is your take on that? Do you expect more forceful stimulus, or the government can still be prudent?
I think the monetary policy is already very loose. So we're seeing record loan growth, M2 year-on-year M2 growth, amongst other things. So I would say that even if you ease monetary policy even more aggressively in the second half, it probably won't help, because the marginal benefit from such monetary policy may outweigh its marginal cost. But I think with specifically for the property sector, though, I think the sector can actually need some more targeted policy easing. For example, we can remove all the purchasing restrictions on property. I think last night in the Zhejiang province, they're letting rural households to go into the city, and they can buy properties in the city and also register for hukou as well. So I think it's a major sort of a reform in the Zhejiang province in terms of the hukou system. So it actually hits two birds with one stone. On one hand, you enable mobility from the rural area into the urban area. And secondly, you're actually increasing the housing demand in the urban area as well. So I think, it set up a good example, for many other regions to copy. So I think, things like that, it's innovative. It doesn't actually require further aggressive easing on monetary fund, and also on the physical side, actually help the local government as well, in terms of property sales and land sales. So, I would say that, more likely than not, we're going to see more targeted policy, targeting to help the property sector to come back to life. And once that happens, you can imagine that, the consumer confidence is going to come back, income growth is going to come back. then it would actually drag the economy out of trouble. So I think this time around, instead of using a bazooka type of policy that we've been accustomed to in the past, it's time to sort of deploy a more innovative policy targeting on the property sector and many sort of other sectors that may need help.
Indeed, a lot of the weak spots, including the property sector, needs particular attention. Let's talk more about domestic demand, which is increasingly become a driving force of China's economic growth. China is increasingly look inward. And in the first half of the year, the total retail sales of social consumer goods saw a jump of 8.2% year-on-year. Meanwhile, the consumer price index increased by just 0.7%, while the producer price index declined by 3.1%. Meanwhile, nationwide unemployment registered at 5.3%, and China's per capita disposable income in nominal terms rose 6.5% year-on-year. So, Haibin, how would you evaluate the role of consumption and domestic demand in driving China's economic growth?
Yeah, consumption and service normalization is a key driver for China's post-reopening recovery story for this year. Indeed, in first quarter, when the economies deliver a strong sequential recovery, consumption played a key role. Actually, consumption contributed about 2/3 of the first quarter GDP growth. But entering second quarter, we noticed that consumption activity has slowed down again. For example, retail sale growth slowed down from 10.6% in March to 3.1% in June. So I think that's a major one of the concern that people are talking about, and particularly the confidence, the consumers' confidence index recovered, but only modestly, still much lower compared to pre-lockdown period last year. And of course, that when we talk about the driver for consumption recovery, typically, if you look at the global, the other countries' experience, it usually came from three factors. One is income growth, along with the economic recovery after reopening. Second is that adjustment in the household saving rate. Typically, household saving rate is much higher during the pandemic period, and after reopening, household saving tend to moving back to the normal level. And third one is, in many other countries, the fiscal transfer to the household sector to support the consumption. In China's case, I think we do not have a meaningful fiscal transfer to the household sector. So it mainly rely on income growth and the reduction, in precautionary saving, as we saw in the last 3 years. But in the near term, I think if there's any negative surprise, I would say mainly many people are worried about the future income. The income expectation is low, so actually that has been increasing their precautionary savings. So from that perspective, I think from policy perspective, some more meaningful measures need to be taken to support the demand sides. You mentioned about the low inflation story, which is very different from other countries after reopening. The performance. China is one of the few actually do not observe inflation pressure, and I would say that's mainly because our demand recovery has always been lagging behind the supply on the domestic side, and particularly this year when external demand is also softening, this demand shortage is actually becoming more severe, adding to the disinflationary pressure in China. So that's a reality we're facing. So in order to put the consumption recovery back on path, I think one is that, of course, we need to support the macroeconomic improvement to bring back the income growth. But second, I think the policy also need to be provide, say, more improve the social security safety network, all right, to reduce the precautionary saving among households. Lastly, I would say, although the policy is very low, but I think I would still recommend the government need to seriously think about some direct consumption stimulus package. For example, some targeted fiscal transfer to the household sector to support consumption.
Well, Haibin just pointed out a very interesting contradictory of China's inflation compared to the global inflationary environment. Hong Hao, what is your take on that? Is there a so-called liquidity trap? And why is China's consumer demand, do you think it needs more stimulus? And most importantly, how to effectively stimulate consumption?
Yeah, I think we don't have an inflation problem, because people are not spending, right? So people are not buying, therefore supply is substantially higher than demand, and therefore you have a downward pressure on price. So that's why, we're seeing CPI is at zero. I think upstream sectors PPI is experiencing deflationary pressure for a few months now. I think Haibin, just now mentioned that, we haven't seen the physical transfer of wealth from the state to the households. And I think, in a more sort of plain terms, it means that, handing out consumption coupons or cash handouts to people, for them to consume. And I think borrowing from the other countries' recovery experience, we do see such handouts did help the Western economies get out of the pandemic trap. So I would imagine that we could have a similar result, but then at the same time, because the propensity to save for the Chinese households is still very, very high. Because confidence, if you look at the consumer confidence survey by the PBOC, right, so it is still showing, it's a mildly it's improving from the bottom, but it is still very low by historical standard. Right, so, in such background, even if you hand out cash, you still have to sort of try to find a way to improve the confidence overall, for people to spend, those cash that you gave to them. So I would say that it's complicated, but I think, cash handout would help. I think targeted policy for the property sector would help. And I think, as Haibin mentioned as well, some policy, to try to alleviate the youth unemployment situation would help to rebuild the confidence in the economy, and therefore, people will start to spend the cash.
Right. Well, employment conditions is closely related to consumer confidence. Haibin, what is your take on China's employment market? We know that nationwide, the unemployment rate is stable at a little bit more than 5%, but young people still face significant job pressures. How do you propose to further enhancing the role of employment in supporting economic growth?
Yeah, first, I would like to challenge the statement that the overall labor market condition is still stable. I think the overall survey-based unemployment rate in the urban area, 5.2%, is misleading. It tends to underestimate the unemployment situation, because we know that the survey base is based on, say, the workers looking for jobs in the urban area. But one caveat is that millions of migrant workers have returned to the rural area last year, and they have stayed actually in the rural area, so they are excluded in the survey-based unemployment rate. So I would say that the actual unemployment rate in the urban area is probably higher than the official 5.2%. So that's the first point I want to make. Second, regarding youth unemployment rate, it continued to register new record high. This is mainly a result of the structural imbalance or mismatch in the labor market. Young workers are mainly college graduates. And in recent years, the biggest hiring sector for college graduates come from service sector, particularly high-end and middle-end value-added service sectors. But these sectors, they have been affected by the regulatory changes in recent years. So in 2022, if you look at the employment data, for the first time in record, service sectors see actually the net job losses, not actually creating new jobs. So that is the problem we are facing, that the imbalance in the labor market, particularly in the current situation. We do see the policy support, which help create new jobs in the manufacturing, construction, and the low-end services. But actually, they do not match the demand of the college graduates. So that's why we see the near-term friction. We see actually the youth unemployment keep on moving higher. So in order to address this problem, of course, the government has taken a series of actions to mitigate youth unemployment issues. For example, providing fiscal subsidy to encourage corporate sector to keep job posts or hire new workers, or diverting strategy to, for example, increasing the graduate school applications, or providing, say, internship, encourage actually the rural area workers. But I think overall, more direct measure is to provide more to encourage the comeback in the service sector activity, particularly high and middle value-added service sector. So that will need a more stable regulatory and policy environment so I take actually recent action from senior leaders to talk to platform economies, to talk to the companies from SOE, non-SOE, foreign companies. That's a very encouraging sign. I think that more equal treatment between the different type of companies and across different industries. That's important to bring back the job opportunity to address the youth unemployment issue we're facing.
Indeed, China's job market is really very, very challenging right now. And Hong Hao, what is your take on the trajectory in the second half? Do you think the government measures to support job seekers and aim to help solve the structural problems will work in the second half? Do we see improvement?
Yeah, I think part of the youth unemployment is structural, right? So because each year we have 11, 12 million fresh graduates from universities. So I think if you look at the in a normal year, the youth unemployment rate is about 10-12%, right? So right now we're talking about 20%. So we're actually 8% higher than the usual rate. So they give you an extra maybe 6 to 8 million young people that is looking for jobs. So, the actual number, so of the 20% unemployment rate, I think 10-12% is structural. And then I think 6 to 8% is probably related to, the challenges that we're facing right now. So, but, we're still talking about a very large number. I'm not trying to sort of explain away, the challenges that we're facing. I'm just saying that, part of the challenges is actually structure, and that is because the university graduates, the Chinese universities are producing may not match, what the physical economies are looking for at the moment. So that create a supply-demand mismatch there. And I think going forward, besides probably, because it's a structural problem and also because, it actually requires a fundamental change of our ways to educate our kids. So there's just so much more that needs to be done, from ground up. But I think this year, many of the businesses are having sort of a lower labor cost as well because you have a oversupply of young laborers. And so, for example, using my firm as an example, we're hiring 10 interns, at a much lower cost this year. Right? So there are people like us, who are trying to take advantage of the situation, and trying to make the best of it. And I think from a higher up perspective. We need a reform from ground up, about, how the way we educate our kids and also, how, what kind of degrees we're giving them so that the supply best match what the society is really looking for.
Mm-hmm. Well, now let's take a look at some specific sectors of the economy. The tertiary industry or services saw output coming at 33 trillion yuan, jumping by 6.4% on year, outperforming the primary and secondary industries. And having just pointed out that job demand in this sector is also larger. And among the main drivers, the catering and accommodation sector expanded by 15.5% in the first 6 months, and information transmission, software, and IT service sector increased by 12.9%. So, what role has the service sector played in China's economic rebound?
Yeah, so service sector has been important in driving the recovery for this year. Looking at the first quarter and second quarter, service sector growth was 5.4 and 7.4% respectively, and both in both quarters outperforming the broader economic growth. Of course, that in June, one alarming phenomenon is that service production index slowed down quite notably from 11.7% in May to 6.8% in June. But overall, I think this year, service sector normalization is a key story for the post-opening recovery in China. If we take a longer-term perspective, I'll see the stronger performance in the service sector is in part because of the slower growth in the service sector in the last several years. For example, if you look at the service sector as a percentage of the GDP, in the past decade, the service sector has been steadily expanded, rising from 44% of the GDP in 2010 to 54% in 2020. But since then, the share of the service sector as percent of GDP has declined marginally to around 53% in 2022. So this is, of course, related to the bigger impact during the COVID. COVID restriction has a bigger impact on the service sector, but also is related to the regulatory change affecting a number of service industry, for example, internet, education, healthcare, real estate services, and also financial services. Having said that, I'll say that I think we should recognize actually the big potential for the service sector to support the longer-term economic growth. Of course, we talk about when we talk about sustainable growth, a lot of emphasis is being put on the productivity growth. But what I want to point out is that the productivity growth not only coming from technology innovation and the manufacturing upgrade, it can also come from the service sector upgrades. Right? So the value added increase in the service sector. It's also very important, and particularly based on our discussion on the unemployment, the labor market condition, I'll say that in the last 10 years, service sector has been creating much more jobs, while the manufacturing has been on net basis actually losing jobs. So I think that's important to keep in mind. We need actually the more stable policy environment to support the service sector developments and also the service sector upgrades.
Mm-hmm. Well, in talk about the economic upgrading, actually, we're also saying the high-tech services is also rising faster than the overall service sector. Meanwhile, if we look at industrial production for June, which rose by 3.8% from a year ago, which is better than expected, and we can see that the manufacturing of high-end products also outperformed, rising by more than 6%. Mr. Hong, what is your view on the economic upgrade? What role do you think technology and innovation will play in China's future growth?
Yeah, I think that is one of the brightest spots in the GDP and also a whole bunch of macro numbers that we saw yesterday, right? So even though the headline numbers is below expectation, but if you look at the IP, especially the new energy car industry output, it's actually substantially better than expected. So I think the Chinese new energy car, especially the new energy car exports, it's taking over the world. And then it's really showing in the IP numbers. And also another surprising figure I found, in yesterday's number really is the upstream mining sector. For some reason, on a sequential basis, it's showing some improvement as well. So I think, when you put everything together, the picture is consistent, with an economy that is sort of bottoming or trying to bottom out. But then at the same time, because of the pressure coming from the real estate sector is so high, and therefore, we're still struggling to find our way out. But I think, in terms of the manufacturing sector upgrade, I mean, obviously, it's been going on for years. If you look at the capital expenditure by the high-end industries, high value-added industries, it's starting to rise, and to a certain extent, in some quarters, it's actually higher than the property investments that we did in the real economy. So that is showing that, from the orientation of investment, so we're putting more money to work in the high-end manufacturing sector rather than, the traditional, property sector. So I would say that, the change is happening, it's continuing, and we can see it in the numbers, but I think, there's still a lot more work that needs to be done.
Indeed, we can see that high-tech investment in the first half of the year rose 12.9% from a year ago, which is quite remarkable. And now let's zoom in on China's trade performance amid global headwinds. Foreign trade in the first 6 months of the year reached 20.1 trillion yuan, up 2.1% year-on-year, while exports rose about 3.7%, while imports softened slightly by marginally 0.1%. So, Haibin, what is your view on foreign trade situation and impact of global economic prospects on China's foreign trade?
Yeah, compared to previous 2 years, the trade is definitely facing a more challenging environment. And remember, in 2021, China export increased by 30%, right? And last year also high single-digit increase. But this year, given that global economy is slowing down, we're talking about recession risk in the major advanced economy, global final demand very likely was softening. So I think that will put a major challenge for China's export outlook. We are looking at the low single-digit decline for the full-year exports. So far, I would say this global weakening story is posing challenges not only for China, but also for other export-oriented economies in the region. Particularly, China export to G3 economies has declined notably in the last 2 or 3 quarters, following very similar trends as other export-oriented economies in the region. But on the other side, that the China's export has been more resilient compared to other export-oriented economies, and that's mainly because actually that diversification efforts of China's exports. For example, if we look by the breakdown by the export destination, China export has been to G3 economy has been declining, but China export to emerging markets, for example, Asian countries, Latin America, Africa, and Russia, they have been increasing in recent years. So that helped to partially offset the weakness in the export to advanced economy. And second, that if you look at the export products, the bright spots for this year is that China's auto exports actually increased dramatically. In this year, actually, China's surpassed Japan to become the biggest auto exporter. So that's also helpful to mitigate actually the weakness in other export products. But overall, net exports for this year, it probably will turn from a lifting factor to a dragging factor for the economic growth for this year.
Right. Well, China's performance in export of auto products is remarkable. And Hong Hao, what do you think are the main drivers of China's the upgrading of China's foreign trade? And in your opinion, how would China further optimize trade structure?
I think this year is difficult. I mean, we're slowing down from the previous 2 years. I mean, reason being the foreign central banks are, tightening monetary policy, and that, the tightening of monetary policy tend to exert downward pressure on foreign domestic demand for Chinese goods. So I think as a result, we're seeing a marked deceleration of Chinese export growth in the past few months already. So I think, and also in terms of geographic diversification, obviously, we're exporting more to the Asian countries. And nowadays, the Asian countries takes up, more Chinese exports than the U.S., right? So it actually becomes the biggest trading partner with China. I mean, obviously, some of the production capacity has been relocated offshore, to continue to export to the G2 or the G3 countries in a different location. And they're really, Chinese-made products. And I think at the same time, it really shows that, how, the geographic gravity has changed, shifted, from the G3 countries, to more closer to home. So I think going forward, one has to sort of get used to such new structure. Maybe, China starting to trade more with our neighboring countries. Then at the same time, with the Western economies trying to de-risk the supply chain from the traditional very linear supply chain, then I wouldn't be surprised to see, they're making more of their own products at home as well, or near shore as well. So in that way, it would be difficult for net exports to be a main economic driver this year, as it did in the past 2 years. So I think, at this juncture, we really need to find out, what would be the next growth driver going forward.
Now, talking about de-risking of some foreign countries, the National Bureau of Statistics spokesperson noted that China faces a complex geopolitical and economic international environment. So, Haibin, how does it affect China's economic prospects in the second half? What is your expectations?
Yeah, I think there's several dimensions when we talk about the external challenge. First is the economic slowdown in advanced economy, which will affect global final demand and China's export outlook. So we have discussed on that. The second dimension is a change in the globalization process. And so particularly that security and resilience is playing a more important role than efficiency in the globalization process. So related to that, we observe the latest trend of friendshoring, nearshoring, or China Plus One, that leading to the global supply chain relocation. The third dimension is related to the change in U.S.-China relationship, particularly the tech decoupling risk and the use of sanction list by the U.S. government. And this will increase the external challenge for Chinese economy. So I would say that the three dimensions, some of them is more relevant for the near term. For example, the weak global final demand more affecting the second half economic outlook. But the globalization story change and also the U.S.-China relationship change, that's probably more posing a medium-term risk or challenge for the China's economic transformation. But overall, I think that for second half, we think actually China, the growth actually from the sequential quarter-to-quarter perspective, second quarter probably is a bottom for this year. And we do anticipate some sequential improvements. But in year-over-year term, probably the opposite. The second quarter is benefiting from low base, 6.3%, probably is a peak for this year. We're looking at, say, around 4.5% GDP growth in year-over-year term in the second half. And that will still bring us to achieve the 5% full-year growth target for this year.
Mr. Hong Hao, what do you think about the potential improvement of Chinese economy in the second half, and what are likely to be the main drivers? And on China-U.S. relations, we know that U.S. climate envoy John Kerry is now visiting China. Do you think the re-engagement will improve our expectation a bit, at least?
Yeah, I think the frequency of dialogues between China and the U.S. is definitely increasing, and also it's helping. So it's going in the right direction, let's put it this way, right? So, more cooperative, more dialogues between the G2 countries would definitely help international relationship going forward. I think, in terms of the sort of a deglobalization that many people were talking about, if you look at the trade numbers, we're actually not seeing it, right? So we're seeing, for example, the U.S. trade deficit against China is still at record high, and that is under the influence of a much higher U.S. tariff on Chinese exports. And also, the Chinese exports as a percentage of global exports is actually increasing, not decreasing, well, before 2023. So, many of these numbers are telling us that, deglobalization or it's very difficult to do, right? So even though, many people have been talking about it for some time now. So I think in a new environment, it really pays for the G2 to resume the dialogues again. And I think going into the second half, we have discussed that net exports probably not going to help us in the next 6 months. But then hopefully as we discussed earlier, targeted policies to help the property sector rejuvenation, consumption coupons, physical transfers from the state to the household to help consumptions, and also to shore up confidence, and also developing new growth drivers for the Chinese economy to move forward. So I would say that the 5% official target growth for this year should be okay. And I think previously the market consensus had a very high expectation because of the reopening, but I think now that we are readjusting to the sort of a reality that we are facing, the challenges that we're facing. But I think with all being said and done, 5% growth is achievable.
Well, thank you. We have to leave it there. Many thanks again to our esteemed guests, Haibin Zhu, Chief China Economist and Head of Greater China Economic Research at JP Morgan, and Hong Hao, Chief Economist at Grow Investment. Your insights have shed light on the complex dynamics on China's economy. So China has demonstrated its resilience, especially in the face of weak global economic recovery. And looking ahead, the country is confident to achieve its 5% growth rate this year, as confirmed by both our guests. Of course, as we move forward, it will be crucial to closely monitor the evolving global economic environment and the implementation of policies to ensure sustainable and high-quality growth in the future. And that's all for this edition of BizTalk, Tracking China's Growth. Thanks for being with us. Until next time, bye for now.